JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 2nd of November 2020. So welcome everyone. Welcome to this first trading day of November. Well, as always guys, in these sessions, we're going to have a quick look at the markets, a few of the charts, just to see what can we expect from them today and tomorrow and and the coming week. So as always guys, before we do that, let's quickly let's quickly have a read through our risk disclaimer. Yes, so the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. Now, so jumping into the charts, the first one I want to pick up here on is Nikkei, as always. So Nikkei this morning had a good run to the upside, so that's good news. However, on the bad news is still that it struggled to overcome this short-term downside resistance line taken from the high of the 21st of October. And look at this beautiful touch here of this area. This area did provide very good resistance, and you can see that then the index drifted back down. Now, of course, we'll keep an eye on this one, and the most important, we'll keep an eye on the cash index as well. We'll see how all that is going to play out, but because if we see the European indices and the US equities pushing nicely to the upside, maybe this will we could see here on Nikkei kind of opening to the upside tomorrow. But again, let's see how all this is going to play out today as well. But for now, looking at this this technical picture here, yes, we are still below this downside line, but given that we had a nice good push here, a strong push to the upside, then kind of gives a bit of hope. However, as I will still stick to the same technical rule, we need that break first before kind of, let's say, considering some higher levels. If that break doesn't happen, then the trend is to the downside. So the trend is your friend. So guys, be very careful on that one. But if we get a nice pop here above this downside line, above this 23,382 territory, this would also place the price above the 21-day EMA here, shown as the yellow line, and then more buyers could be joining in here. So again, keep your eyes on that one. But if it starts drifting back down and falls, for example, below today's low here, near the 23,097 territories, something like that here, approximately around there, guys, then yes, we could consider maybe a bit of a decline here towards the low of last week or even further below that. Now, jumping into Shanghai Composite, the index closed already. It already closed, yes, but it closed fractionally in the green. I mean, virtually unchanged, basically. So still the idea was that, and still remains the idea that I would like to see this nice good test of this upside support line taken from the low of the 19th of March. And if it provides a good hold up here, we could see a nice rebound and a push higher. So basically, let me just probably adjust this very quickly. So something like this for now. Keeping an eye on. If this upside line gets broken and the price falls below the 3,181 territory right here, now this is where it could turn out to be a little bit more ugly for the bulls, and we could see more sellers joining in here and potentially driving this one lower. So keep your eyes on that one. Like I said, we are at a very interesting spot. So let's be very careful, be very cautious, but yeah, keep your eyes on this upside line. The German DAX is, or should I say, was in the red last week. I mean, although we saw on Friday the index recovering somewhat, still it ended the day in the red and basically below this area, below this key support area, which previously was seen as support. Now it was seen as a nice resistance on Friday. So the index closed below that area, below this 11,575 territory, and now, of course, the big question here is, can it actually get back into the game? However, looking at the cash index right now, we are still basically we are at the same almost level where we've closed on Friday, so not much has changed. So the cash index is currently trading just bang on in this area. That means it's still below this 11,575 territory. Now, keep your eyes on this one today. If the index struggles to get back above it, get back above this whole area right here, well, I mean, further declines could be possible. But if it does get back above it and we see a nice daily close, then maybe going into Tuesday and Wednesday, we could see maybe a bit of a correction here to the upside, because last week, as you can see, we had a decent decline. Keep your eyes on this one. Like I said, it could be quite interesting, but at the moment, the trend is still to the downside. In order to get a little bit more comfortable with the downside, what you could do is keep your eyes on the low of last week, which is also the lowest point of Friday here, and that level is around the 11,450 zone. So a nice good drop below it would confirm a forthcoming lower low. So basically, if you're looking for something a bit more reassuring, then a nice good drop below this area may open the door towards further declines. DXY, now the dollar index is pushing nicely to the upside, so everything's working according to the plan. I talked a lot about this last week, and basically what I was saying, that keep your eyes on this 93.90 level, because that's what we need to see a break off in order to before kind of, let's say, aiming for some higher levels. And ideally also I'd like to see a daily candle staying above it, and this is what we had. So now it seems that the dollar index is showing willingness to drive further north. However, I'm not going to target way too high here. I'm going to aim first for the 94.65 level, which is seen here as a nice area of resistance. Also, as was seen here as a good support level on in March here. And then I'm gonna, like I said, I'm gonna target this area first, and then we'll take it from there. Because if he wants to push higher, that's great, that's wonderful. This would confirm a forthcoming higher high on a break of this level. But yeah, for now, let's keep it short and simple, guys. If the price continues to trade above the 93.90 level right here, then yes, my target is the 94.65 next. In terms of the downside on this one, well, I would prefer to see a break below this upside line, below the short-term tentative upside line, this downside line as well. Maybe not so much of this downside line, to be honest, because it kind of got violated already. So I can actually get rid of it for now. So basically, I'll keep an eye on this little short-term tentative upside line. If we get a nice drop below it, then we could start considering some lower areas, especially if the price also falls below this little inside swing high of the 93.13 level, and then yes, further declines here could be possible. Now jumping into gold, and gold is, well, it's tricky. I would say it's a little bit tricky because the dollar index, you can see that the dollar index is rising a little bit, and gold is at the moment also kind of pushing slowly, grinding slowly to the upside in the short run. However, let's not forget that we're still trading below this downside line taken from the high of the 18th of August. And if you want to look at some lower levels now, and if you want to get a little bit more comfortable, what you could do is keep your eyes on this this little territory right here, the 18 63 mark, approximately around here. Now this is the lowest point. Sorry, not the lowest point, I believe. So if is it yes, that's the lowest point of August. And also last week, the price got held here near this level as well. So near this 1863 mark. So let me just adjust this carefully. Now I do understand that last week, for example, we did get a little overshoot here, but on Thursday, on Friday, the candle did find this as a good support and yep, drifted higher. So basically, long story short, guys, still the trend is more to the downside, although we are seeing a little small correction here to the upside right now. But if you want to look at some higher levels, well, wait at least for a push above this downside line. And previously I talked about this 1933 territory. Now you could keep an eye on this barrier, the 1911, and that basically is the high of last week. So a nice good push above that area may strengthen the upside scenario, but again, of course, if you're very careful and very cautious, you could still keep an eye on this 1933 zone. But if you're like I said, if we get a push already above this 1911 territory, now of course we'll have our stop losses in place, but this could increase the chances for this the commodity to move further north. Jumping into WTI oil now. Oil is feeling the heat, of course. I mean, due to the corona issues and because of the fear of another major lockdown. So yep, you can see that that's what's happening right now on WTI oil. I've talked about this previously last week. Basically what I'm saying, that if this upside line gets broken and the price then falls somewhere below this 36.66 zone, then yes, of course, lower levels could be met, where my next target here will be this 34.38 zone. We overshot it today, for example, you can see that, but it's currently the price is currently getting a hold up here. So let's see how all this is going to play out, because if this area somehow manages to provide good support, and then we could see the commodity maybe rebounding a little bit here, but even though if it rebounds, if it struggles, for example, to get back above this 36.15 territory, which is the lowest point of September, this is what could happen. We could see another round of selling here, potentially even going all the way here towards that 31.16 level again. But again, for now, it's a bit of a difficult one here. Of course, we did already have a decent decline in the short run, so maybe a small correction to the upside could be possible. But again, keep your eyes on this lowest point of September near the 36.15 mark. If it climbs back above this upside line, then yes, we could start maybe looking at some higher levels again. Ripple. Ripple is also very tricky, because last week we saw Ripple breaking this upside support line taken from the low of the 13th of March. You can see that yes, we kept getting these false breakout, but you can see today the crypto is kind of back trading back above this upside line. However, on the negative side is that it's currently sitting below these two EMAs, the 21-day EMA and the 100-day EMA. That's why I have my upside scenario from a break on a break of this 0.26 level. If we do get a nice push above that area, then yep, this is where I'll start looking at some higher levels. In terms of the downside, I still need to see that drop below the 0.2288 level before considering further declines here. But at the moment, it's just stuck here. So let's continue observing this one. Let's wait for that confirmation break and then do something about it. But at the moment, yeah, it's a difficult one. Some of you might see this as a potential double top pattern here, with the neckline being here. Yes, you could do that, but it's not an ideal one, maybe I would say. I mean, something like this, where we in the beginning of August here, or in general in August. Now this was a beautiful kind of double top pattern here, and then it kind of drifted back down. So yep, that's a more interesting one here. Yes, you could consider this as a potential double top, but it's I would prefer to stick to some of these levels instead. Now jumping into a few pairs, and by the way, today in terms of the economic calendar, we do have a bit of data coming out. So we do have some manufacturing PMIs from Europe. So we have the Eurozone in general, the Eurozone manufacturing PMI, UK's manufacturing PMI also for the month of October. So yep, keep your eyes on those. Also, we do have the PCE core PCE and headline PCE price indices from US. So also keep your eyes on that one. Also, the manufacturing PMI from US is coming out, and ISM manufacturing PMI. Now, this is what's going to be quite interesting. Currently, for the ISM manufacturing PMI, the expectation is for a slight increase from 55.4 to 55.8. If that's true, if that comes out exactly as it is, I mean, then well, to be honest, maybe not much movement could happen, because if it comes out much better than the forecast, now this is where it could become very interesting for the US dollar. Now, but jumping back into the pairs, last week I talked about AUD JPY, and I told you explained this scenario where we could see a bit of a correction here to the upside. However, if it struggles to get back above this 74 mark, then yep, another round of selling here could be possible. And as you can see, oh, sorry, I do apologize. The pair did exactly that. I mean, the pair is now drifting lower. I mean, after it tested this 74 territory and failed to move above it, and now the big question here is, can it actually move further south? Now, what we could do is just to be on the safe side is to wait for a drop below the last week's low, which is around the 73.14 zone, and then target lower areas. Now, again, for now, it's doing everything what it's supposed to be doing, what I was thinking is going to be doing. But yep, as I said, to be just a little bit more on the safe side, you could wait for that drop below the 73.14 area, and then yes, this would confirm a forthcoming lower low, and the next target here could be that 72.53 level, or even we could see a further move towards the high here of this 27th of May near the 71.92 level. So again, keep your eyes on that one, could be quite interesting. So yeah, but let's maybe, just to be on the safe side, let's wait for that confirmation break here below this 73.14 zone. USD/CHF. So very interesting developments here. So at the moment, looking at this one from a more positive perspective, especially if the DXY will continue moving higher, and if so, then yes, USD/CHF here could also push to the upside. Initially, I'll target this 100-day EMA shown as the green line, but then my next target is the highest point of September near the 0.9296 level, and then we'll take it from there, guys. So basically something like this here could be possible. In terms of the downside, well, I mean, it could be that we could start looking at some lower levels from on a drop here below the 0.1993 zone, and then yes, lower levels here could be met. Now, again, for now, this is we're leaning a little bit more to the upside on this one. So let's see if this can actually continue pushing further north. But if it starts dropping here below this 21-day EMA and below this 0.1993 zone, somewhere around here, then, well, I mean, maybe the upside scenario could be off the table. But again, at the moment, it's not the case. GBP USD. So GBP is drifting lower. The pair is trading nicely below this psychological 130 zone, also below that 21-day EMA, but above this 100-day EMA. So I want to see how this is going to behave near this 100-day EMA, because as you can see, recently it did act as a good area of support. So if it does drop below this 100-day EMA, now this is where it could become a little bit more interesting for the sellers. However, only up until this upside line. So because as long as this upside support line taken from the low of the 18th of May remains intact, then yes, we could still see the upside overall here. And also here we have the 200-day EMA approaching this area as well, so which also could provide maybe a bit of support. But if this upside line gets broken, now this is where it could become a little bit more exciting for more sellers. Now, in case this decides not to drop below this 100-day EMA, if you want to look at some higher levels, wait for at least for a push back above the 1.30 zone, and then we could consider maybe some higher levels. But even so, we still have a few key resistance levels here to overcome. So that's why if it does climb back above the 1.30 zone, then yes, like I said, we'll aim for some higher levels, but we'll be very careful. And finally, Euro USD. So this pair again is also doing everything what I was mentioning last week. Yes, it did drift nicely below this 1.1696 zone. It's currently getting a hold up near this 100-day EMA, but to be honest, it's very close to my next target, which I mentioned last week to you guys, this 1.1612. Just we're shy of a few pips of reaching that, so yep, I'll continue targeting this area. But if that gets broken, if this 1.1612 zone gets broken, then of course, yes, we could start looking at further declines, and maybe even going all the way here towards that 200-day EMA. But again, for now, keep your eyes on this. Keep your eyes on this 1.1612 zone. If that gets broken, then yes, like I said, we could see a further move lower. Now, okay, guys, I really hope you found it useful. I'll have to wrap it up here. Thank you very much for watching and listening. If you want to catch my video later on, my trader's tea time, as always, 14:15 GMT time. For now, guys, I hope you have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.